Good morning, everyone. Today is Thursday, November the 3rd. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. In a strange twist of fate, yesterday's video did not make it up for some reason. It never uploaded, and so I just realized that. And henceforth, there are two videos sitting there now, but if you only click on this link, you'll get the one today. Yesterday's video really did talk about the levels, what traders were trying to do, and where they were looking for the edges. And here's what I think is very beautiful. I'm going to maximize this. We are looking at the monthly open that occurred 2 days ago. Okay, so we actually gapped up into the open of the month, right, in a nice gap up. And so the gap up was even higher than the high of the prior week, the prior month. So when you are actually looking at these monthly levels, and remember, every green line you see on my chart, I'm going to delete this Fibonacci. It's noise right now. Every green series you'll see actually match the month readings. So this is going to be a monthly straight line here. It's going to be a monthly close. This is going to be a monthly open. And this line here is the quadrant. This is the prior month, and I'm going to also remove it. Not supposed to be there. And now we are looking at this range. Now, the moment it started breaking 386, weakness started showing up in the market, and we ran it all the way down. Now, what's this yellow line? Well, it's last week's close. So this really, not close, excuse me, low. This really is going to give us an area where the traders are going to try and hold some support. Okay, so let's actually see how they're doing with that. We're going to go to the 1 hour chart because we've got pre-market action. And we're going to see what they're trying to do. Now notice, this is last week. And here is what's going on right now. They came in, tried to bounce right off the close yesterday. Oops, came into a lower high, and we've now broken through that weekly level. Notice over here, there's a wick down. When a level is important, traders might break it several times before they resolve. But if you're trading a tighter platform, a tighter timeline, right here I've got the VWAP. If you're trading a tighter timeline, then you just simply follow the slope of your VWAP, right? Your bounces into this region are going to give you sell zones, and the low slash open slash close of the other candlesticks will give you target ranges. But you can see from times past that they're trying to hold this level. So what really might we do? Let's go to the daily. And again, the reason I'm being this explicit is that you can do this for yourself on any chart in any market, okay? It works. It's fantastic the way that it works. But let's take a look at yesterday's relative motion. We really closed on the low, which is very bearish. When you close on the low, a lot of times the first pass bounces are going to give you sell zones. They're all the way down here, right? And the last time we had a day that closed in that range, it's here, what do you know, filling in the gap, right? So what we might do is gap down and then fill in this gap over here. So in essence, the gap, it matters, but then maybe it doesn't matter as much as what's going on from daily and weekly formations, okay? So the moral of the story here is keep an eye on what happens when your new week opens, which always we know is Monday, but what also happens when the month opens. Because the second we get that weakness coming off of that monthly edge, it tells us, hey, all these resistance lines are actually true, and we're going to start fleshing out support. Any kind of buying yesterday was trying to catch a falling knife. Today's going to be the same way, because you know what? Tomorrow we're going to get a jobs number, and Fed Powell said yesterday, we're not stopping. We're not stopping. And so, I don't know that the market actually believes him, but you've been on the wrong side of the trade if you are trading the opposite of what he says. So that being said, If the jobs number is great, that might be bad news. And if the jobs number is bad, that also might be bad news. So tomorrow is going to be a very, I think it's going to be a binary day, and we're going to set up for it today in the Benzinga Pro platform. All right, so here's what happened with the Qs. Notice the same thing, only they're not as strong as the others. And so here's what happened on the month. As soon as it lost this edge at heavy congestion, we just started fading. Now notice, this is well below the open of last month and the month before that close. And so they are really going to battle to try to hold this. But let's see what's actually happening in terms of the weekly formation. And this is going to be sitting, yeah. Once it starts holding this 266 area, we'll have a shot. Oops, there is an artifact that doesn't need to be there. Once it starts holding, we can see traders trying to buy this. Now remember what the orange line is. The orange line is what happened last year. And the thick orange line is last year's low. So look at this, lower high. We broke the low, lower high. Now here we are under the yearly low again. This is very bearish for the Qs. Very, very bearish. I would be incredibly careful looking at these kinds of things as time moves forward. All right, this is kind of a long video, but again, study, right? Study and you'll make it happen. All right, when it first breaks, like it's breaking right here, the trend tells you the direction and whether it will likely hold the break. Now you might say, but Anne-Marie, the trend is very sharp down here, and it broke, and then it held the region. But see, really, it just broke and fell right out of bed because the real line of importance for the Qs was here. And so just realize charts are going to trend in their general direction, but if it's a big level, expect to find buyers or sellers sneaking in to try to move the chart in a way that serves them best. All right, that's it. Super long video. Sorry about that. Bounces are likely to fail in this formation, but overall, folks, we are still in a very sideways clock pattern. I can draw one line and go through 1, 2, 3, 4, 5, 6, 7, 8 weeks of motion, almost. Okay? That is a very choppy, non-directional market. See you tomorrow.